you all for dialing in and joining our second Green Shoots episode this week, a bonus episode. Today we partnered with the Payments Development Office at MAS to curate a discussion on retail payments and specifically how the global pandemic has impacted the payments value chain, both in the short term and the trends that are here to stay post-pandemic. As always, we'll do our best to weave your questions into the discussion, and any we don't get a chance to address, we'll follow up with answers afterwards. Towards the end of the session, we're also joined by Jo Yeo, the head of the Payments Development Office, to share more on key e-payments initiatives from an MAS perspective. In fact, DPM Heng mentioned in his budget speech this week that over 50,000 businesses have registered for Pay Now since the beginning of April, which is a tenfold increase. We've also had over 950 registrations for this session, which is record-breaking for the Green Shoots team, and this shows the importance of this topic in light of COVID-19. So over to you, Pat, to kick off the conversation.
Thanks, Becca. So we've got a lot to cover, so let's get this show on the payments road. And the first speaker I'd like to introduce is Joel, who went to theatre school and held ambitions to be on Broadway. You'd have made a great Billy Elliot, Joel. In his spare time, he is the Asia Pacific VP for Rapyd. He is a real veteran in the industry, having served stints at Grab, PayPal and JP Morgan, and it's a real pleasure to have you on the show, Joel.
Thanks for having me.
And our next speaker is Reuben, who as a child wanted to build robots for a living. In his spare time, he is the Senior Managing Director and co-head of Grab Financial Group, and prior to Grab, Reuben was co-founder and CEO of a telemedicine startup and served stints at the Walt Disney Company and at Bain. Thanks for joining us, Reuben.
Thanks for having me.
Next up is Jeremy, who didn't want to do anything as a child, just chill and watch the world go by. When he realized that a freelance layabout wasn't a career option, he put all of his energy into building tech companies. His latest startup is Liquid Group, a mobile payments platform. So thanks a lot for making the time to join us, Jeremy.
Thank you. Thanks for having me.
And our last speaker is Milind. What can I say about Milind that you don't already know? He's a real maverick, and as a child, he wanted to be a fighter pilot, having been inspired by Top Gun. When he's not flying planes, he heads up digital payments at OCBC, and he's another veteran in the industry, having served stints at Chase, PayPal, Visa, and EasyTap. So thanks for joining us, Maverick.
Thanks. Thanks.
So as Becca mentioned, we've seen major growth in e-payments initiatives in Singapore, especially since the start of the circuit breaker. And Milind, I'd like to pick on you first. So from a bank perspective, what are the new behaviours you're seeing in payments amongst consumers and merchants?
Thanks, Pat. Look, I think in general, what we're seeing across both sides of the universe is actually more and more digital payments, right? So you've got merchants who historically were never taking digital payments because of a multitude of reasons, including cost. They're moving on to Pay Now, and they're moving on to different types of payments. I think from a consumer perspective, you're losing a lot more in terms of the physical interactions, but you're getting still a lot more digital. I think the user experiences are changing. People's expectations of the user experiences are changing. And I think in general, this is, I think a kind of a breaking moment in terms of where digital payments can go, because people are getting more used to it on both sides of the pipe. So it's a super exciting time, obviously a really tough time. But in terms of the solutions that we're all building, it's going to be even more important on what we do going forward.
And how does that compare to what you're seeing at Grab, Reuben?
Yeah, thanks for the question. So it's been a really interesting time. We see basically an acceleration of the digitization of financial services. I look at it from three perspectives. One is on the consumer front. So at Grab in Singapore, 80-90% of our transactions were already cashless or done via e-payments. Outside of Singapore, we saw a massive acceleration where people became really quite averse to handling cash, both in terms of our drivers or merchants and as well as the consumers. So a huge increase there. On the seller front, basically for them, it's just a race to get online ASAP, because they knew that if they didn't, within months, their business will be shuttered. And so, what we've done is really provide them with the tools required for them to just get online very quickly. And literally, we onboarded 75% more merchants in the last 6 months compared to the last 6 months of 2019. And third trend I wanted to highlight, which was the most heartwarming for me, to be honest, out of this whole COVID, is just seeing the heart and the generosity in humanity. So we teamed up with an organization called Giving.sg, where we allowed our consumers to donate their rewards points to support the frontliners and or families that have been affected. And within days, it became the second highest redeem rewards item on the Grab platform. And that for me is just amazing. And if I can be shameless to have a plug here, please, if you guys have any extra rewards points, please donate to the frontliners and the affected families. It would just go a long way to help them out.
Early on in the session for a plug there, but a worthy one at that. So we can post a link to that, I think, by the end of the session if you check the chat functionality. Joel, over to you. What are you seeing from a Rapyd perspective, and what behaviours are you expecting to remain in the future, and which do you think will revert back?
So I think Reuben touched on a really important point, which is that the process of getting online and digitizing is the hardest problem for every business today, right? Whether they go with mainstream platforms that are very large and can get them there right away, like a Grab, or they're trying to roll their own with a quick Wix website and putting Pay Now on the screen, and everything in between. There really isn't one answer other than you got to be in the game. It's almost like sailing a sailboat, right? You got to get in the water and start moving to figure out the destination, because nobody really knows exactly what's going to be required for them to adapt. That means that platform companies that are in the e-commerce or the menuing space have a lot of work to step up and bring in people that have been on the sidelines for a long time and get them in very, very quickly. Payments platforms like Rapyd obviously play a role to give people a lot of payment choices very quickly from things that they really hadn't thought about, perhaps outside of cards in the past. So bringing Pay Now or Pay Now QR to the masses is something that we're doing a lot of, in addition to the wallets. But really giving people the tools so they can start to adapt very quickly for whatever their customer base or their potential customer base will respond to, because they got to keep the revenue flowing. I think that's the most important thing. In terms of what sticks, I think quite a lot of it's going to stick. I don't think there's much chance of us reverting back to the mean of where we were, because I don't think anybody is that naive to think that that it's all going to go away and magically be better. People who are still around are going to need resilience. They're going to need a lot of options, and they can't really only have one path to make their business prosper. They need many paths.
Jeremy, do you agree with that? Do you think these behaviours are here to stay? What are you seeing from a liquid pay perspective?
Yeah, actually, pretty much echo what all the rest of the speakers have been saying as well. Key points I would try to say is it's at a tipping point. So I don't think e-payment is, it just started today, or digital payments. It's been a evolution along the way. I think what this has done is that it has accelerated, but the acceleration matters because there is a tipping point. I mean, if the majority of your volume is, in physical and cash, you won't change that much. But now, because of this, I think a lot of the main volumes and the majority of revenue collection is going to become digital. So it is a tipping point. And when it becomes a tipping point, most merchants, retailers will be more used to it. So, and they will focus on it. So I don't think it's going to be, it is a ground shift in that sense. It's not a slow step, or even if it's a slow step, or even if it's a wider step. It was just at that tipping point that moved a lot of business onto digital. And a lot of them will realize that it's more cost effective to be digital than to still maintain cash. And if everything is automated, whether you're talking about e-invoicing, e-payment, it's a tipping point, they get across. And there's another point that I want to make as well is the demographic shift. Thanks to COVID, or at least because of this situation, I'm finding elderly people also paying attention to e-payments. This is probably the most difficult group to move. But specifically in this condition, specifically in the characteristics of this virus, it targets a certain segment, a certain age group. And ironically, this age group and demographics are now more open and more encouraged to adopt e-payments, which is, I never thought it would ever happen, but here we are. Yeah.
Thanks, Jeremy. And you mentioned cash, and there's certainly been a lot of press around the future of cash and its potential demise. And so I think at this point, what we'd like to do is bring up a poll to get the audience views on cash. The question that we're going to ask the audience is, what will happen to cash volumes post-COVID-19? And so while we wait for the audience to vote, and we'll get your views on those as well, Reuben, I'd like to pick on you. What are your thoughts on the future of cash?
Yeah, I was going to vote. I think it's too early to call the demise of cash. I think that there will be certain instances where it may be necessary. But to be honest, from what we're seeing, consumers are moving away from cash, at least on our platform, and they just don't want to deal with it. And sellers as well. I've seen many stores putting up signs, and saying that they prefer to accept only cashless methods. I think this trend will just carry on because of the convenience and because of just the hygiene factor of it. I think I'll cite an example of a Grab ride. The first few times of using cashless on the Grab ride, it's strange because one would reach into the pocket thinking that they need to pull out cash to pay, but after a while they realize that, hey, actually no, it's been paid using the card on file. Subsequently, when we enter into other markets, actually we forget or we take rides where there were cash payments required. We forget the method of paying by cash because we just get so used to just walking out without even exchanging cash with the driver. I think this kind of behavior will just get more and more ingrained, where consumers are just used to embedded finance into their everyday life.
So, but what about the benefits of cash? So anonymity, and that's quite a key piece. And we've got on our chat screen, we've got someone from India that mentioned that after demonetization happened in India, initially there was a huge spike, and then over a long period, the bump was there and cash came back. So is that a reference point potentially? I don't know. So it'd be good to kind of see what your thoughts are, Milind.
Yeah, I was actually, I happened to be in India when demo happened. I do think cash comes back. I don't think it comes back. What is changing dramatically, right, is the fact that there were merchants and small merchants. I mean, especially with us at OCBC, we've got a bunch of small merchants who historically may have never looked at digital payments. We were essentially a place to where we were the safe place to put all the money. And I think what's happened with these guys is they've understood that digital actually does enable a growth in their business. I think I echo what Reuben said. I don't think cash goes away, but what happens is now across the multiple players in the ecosystem, you've got the ability to understand how your business can actually survive without cash, and actually, and more importantly, it can grow without cash. I think that the reality also, just in addition to that, is the fact of when you've got certain kind of infrastructure solutions out, which some countries do and some countries don't, I think that is going to be the large mover of what happens specifically. And I think, look, everybody, all four of us on this are trying to attack different parts of that ecosystem. In reality, payments isn't rocket science, right? Somebody wants to pay, somebody wants to get paid. They want to do it at a reasonable cost, and they want to get out of the way. And I think that's really what drives it. And I think that's the thing that puts pressure on cash, with some of the fears that exist around it, and with the cost of processing a payment going lower with some of the real-time payment rails as well.
So we've got an audience question that I'd like to kind of bring to the table as well. It's around, do you think Singapore and Southeast Asia will achieve the levels of cashlessness as seen in mainland China? So Joel, I'll pick on you.
I mean, I would say ultimately, yes, right? Southeast Asia, you have a population that is extremely digital, right? People with multiple phones, multiple lines. We just did a study across the region, but Indonesia stood out, where the vast majority of the population self-identified as an innovator, that they eagerly sought out digital innovation presented to them and they trialed it. I think that level of hunger is something you really do see in a lot of Southeast Asian markets as well, where people want to be engaged. The problem is the solutions, weren't all there. The acceptance wasn't there. And that problem is being solved, right? If I want to try a new payment method or get my rewards or use some line of credit now available to me, if I can transact at any merchant through Pay Now QR, great, I'm unblocked. I can start to innovate and start to use different solutions. If the acceptance isn't there, then I've got a problem. The merchant didn't used to have a value proposition necessarily to drive cashless because they perceived cashless as expensive, but now they recognize that they're going to get paid instantaneously. They can pay their suppliers instantaneously. They can pay lower fees, or they don't have to discount invoices or borrow working capital. So all of a sudden, there's a value prop to being in the e-payment space. which extends to the merchant and extends to the consumer, that wasn't there before. Will cash snap back for some use cases? Sure. Many years ago, I met with a merchant in India who was a diamond merchant. And I asked him this question. I said, do you want to pay your taxes or whatever? He said, look, I'm going to pay something in taxes. That's my problem to worry about. Your problem is how do I make more money, right? And as long as you can convince the merchant that e-payments helps them make more money, spend their capital more efficiently, get better access to credit, they'll adopt it because it's part of a whole solution from their perspective.
So I think at this point, it'd be good to bring up the poll. Dawn, can you please bring up the poll? And it would be good to get the panelists' views on that. So Jeremy, was this what you were expecting to see? It seems there's very few people saying, I love cash.
Yep. So I mean, basically the same theme that we're saying. It's, it's a bit of 3 steps forward, 1 step back. We don't think anything is gonna, we don't think cash or coins are gonna disappear abruptly. I mean, there are a lot of emotional attachment to using cash and coins. It will still always be around. But the idea that Southeast Asia or different markets won't be able to replicate what China has done is, it's not true. I mean, I don't think there's any cultural reason why China went e-payment and the rest can't. So in a sense, like what Joel has mentioned is about the tools and putting things in place, the convenience. So everything is getting on, but even in China, there's still cash. Minimally used, no, not even minimally, there's still substantial usage of cash, but Alipay, WeChat, they're strong, we get that. It's the same direction. There will be a huge reduction, but cash won't go away. So anecdotally, people will still be able to use it. Whether it'll be economic to use it, we don't know. But it will always be around. And the poll is pretty much there. I mean, the majority thinks that will be either a huge or a minimal reduction. So definitely step towards that direction. We're not coming back. We're not going back towards, cash, but doesn't mean we'll be completely cashless tomorrow.
It seems like there's a clear alignment there between the speakers and the audience as well. So the key topic for today's session is how the retail payments value chain is changing in light of COVID-19. To make this more interactive, we've asked each of the panelists to choose one proposition that they think will see the biggest growth post-pandemic. They're each going to present now for a minute or so, and then we'll discuss the topic as a group before moving on to the next pitch. And we're also going to bring up a poll at the end, so just adding a bit of competition into the mix for who presents the best proposition. So I'm going to kick off with my first victim, Milind, that's you. What's the payment proposition that you've chosen, and why do you think it will see the most growth post-COVID-19?
Okay, thanks. I don't know about victim or not. We'll find out at the end, I guess. But in reality, look, I think going back to what we've been talking about, I think there's a general move towards how smaller businesses and the mass market of merchants actually do digital payments. And I think there's been a large push towards enablement, towards merchant acceptance. I think the one piece that's missing, and I'll give you my personal example. I ordered food from somewhere, and today what happens is that I order it on a WhatsApp or on some kind of delivery channel, even through a phone call. They then either send me a QR code or a UEN or something else if it's on Pay Now, or they send me a link to go, fill out a form with all my credit card numbers in some cases if they're not online. And I think the one piece that post-COVID should really take off, and I think this isn't rocket science, it's been done in a few other countries, is specifically what I call request to pay, but on a Pay Now rail, which is the ability for these small businesses to send a message over on whatever channel that they want, and for the customer to basically click on it, pay directly through the real-time payment rails on Pay Now, through their bank accounts or whatever else, and then actually finish it end to end through one of the ecosystems, right, that exists altogether. And I think the big difference there is this request to pay functionality has always existed for card, or it's existed for a very long time. Joel and I worked on it at PayPal as well. But specifically to be able to do this on low cost rails so that the merchants can get their payments in real time, they get it at a cost effective method, and they're able to then scale their business on top of that, I think is the game changer. And then on top of that, there's got to be a way for the larger players that are digitizing these guys to help discovery as well. So I think it's got to be an end-to-end solution post-COVID, and not just post, even now. I think there's a need for this solution out there. It's just waiting to be cracked by somebody or the other.
So the request to pay model, I can see you nodding along there, Reuben. Do you see value in this from a Grab perspective?
Yeah, for sure. I think from a seller perspective, they definitely especially those smaller or more casual social sellers, they definitely would benefit from payment methods like that. And that really inspired one of our features that we rolled out during COVID. It was called a remote payment link that basically allowed sellers in the midst of a transaction to just send the buyer a link, and then it replicates the experience of a QR code without having a physical QR code. That's how we provided that functionality.
Yeah, and I think if I can just add to that, right? I think a lot of the loops have a lot of the payment guys have solved these problems in smaller use cases. I think the ability to build this for the mass population that happens, across a global scale, I think that's the game changer that needs to come into space. But I agree, Reuben, I think it's great functionality. It's how do you scale it across everybody that has access to cash or banks?
That's right. Completing the mission that PayPal started.
Handing of the baton.
Yeah, exactly. It's a good handing of the baton from Milind over to Joel as the other ex-PayPal representative on this call. Take us away with your payment proposition that you think will see the most growth post-pandemic.
Sure. So I think we start at the same point, right, which is that the real-time payment infrastructure is an incredible asset, right? And adding on to that asset, and with different countries adding on in different paces, you really start to see what the future can look like. And I would argue one of the biggest components of that is actually interoperability, right? It shouldn't be a rail that's usable by bank-based wallets or e-wallets that are not bank-based, but extended to consumer payments, extended to insurance companies, and effectively a broad-based switching solution where every merchant doesn't have to sign up with every single acquirer to make it work. Every issuer's wallet will work everywhere that there's acceptance, and then the cost is a known cost, right? There's a baseline cost structure. What you see with interoperability with prompt pay, with QRIS, with UPI, very, very broad usage beyond kind of the percentage of the population that's using Pay Now QR today, which is still huge. And I think that's a big opportunity to leap forward and say, look, is the entire ecosystem welcome to access these rails? And once the answer to that is yes, then every single consumer basically is in the game, right? Because the one thing the consumer is really concerned about in the e-payments world typically is acceptance, right? More than anything else, right? They don't want to show up and have their card not accepted, their wallet not accepted. In the old days, they didn't want to stand at the front of the queue and be the one person holding up the line, right? Like the little old lady writing the check. You don't want to be that person, right? So if the thing works and it works quickly, then everything else can come behind it, right? Request to pay is a critical feature, but I would say interoperability is the other key feature.
Jeremy, you're coming closer to the camera as Joel was speaking there about interoperability. What's your view on this?
Yeah, so actually, perfect in terms of where this is leading. So actually, I agree with every single speaker, and I'll take the fourth iteration to the features that we said. Yes, we believe all the national networks will become more popular. And yes, we believe all the extra features built into the national networks, including the push, the QR scanning, whether you're sending a request to pay without a QR, and all the way down to interoperability between national networks. So if you're talking about cross-border, you're talking about UPI from India, FPS from Hong Kong, you're talking about the Taiwan Pay models in Taiwan, you're talking about PayMe, PayNow, Prompt Pay. So at some point in time, we believe the trend is all of these people, real-time networks will come together. But the final feature that I think, or something that I would like to add to the conversation, is what we call concurrent processing. It's an interesting concept, and a lot of us are doing it without realizing what it means. Because at the end of the day, payment is just payment. You're transferring funds from one account to another. You know, nobody wakes up every morning and says, I want to pay for something. You know, that's the last thing you want to do. You want something, it's just that happens that nothing in life is free. You have to pay for it. So the idea behind concurrent processing, it means that payment isn't just going to be the fact that you're walking somewhere and you're just going to buy something, you're paying for something. It will be bolted together in a more open framework that allows a rebate, a discount, for you to burn your points, for you to get a form of reward, a form of points, a form of loan applied, a form of instant approval for something. Because the systems today that we all talk about are different. I mean, you know, we used to talk about it within our company. There's a difference between SMS and WhatsApp, right? SMS is when you're sending fixed messages, 140 bytes, 100 characters. Payment rails today essentially do very much similar, right? You send a fixed amount of information across. But digital payments, as embodied by digital banks and digital wallets, effectively, you can do a lot more. You're not just sending fixed messages. In terms of this all open platform that's coming across, You can send images, you can form data. The amount of data that can go across the network, it's very rich. It's there, it's flowing. So one of the bets that we think in the next 5 years is that the banks and wallets are going to stumble upon this fact. And we're going to realize the amount of concurrent transactions they can do during a single payment. So imagine if you pay for something, and during that payment, you can automatically trigger a loan. Or during that payment, you have the data of what the guy is buying, you can automatically put electronics goods under installment plans. Or if you're buying for something, and then you can immediately rebate your points anywhere you want in the world, et cetera, et cetera. I mean, the permutations are endless, but what I'm trying to say is the infrastructure itself is there, and the individual banks and apps will probably leverage on it to drive more and more concurrent transactions. So that's where I think the world might head to.
Joel, do you have any comments on concurrent transactions?
No, I totally agree. We used to call this in the old days planning and fulfillment, right? You can plan a complex set of actions, and when you press the button, they all happen, right? So to put it into the Grab context, right? Grab is going to direct a consumer to make a purchase in a store. There's going to be a rewards offer, a cashback offer. I can fund it with pay later. That's a great value proposition that Grab can sell the merchant and Grab can sell the consumer. But by the time the consumer shows up in the store, the payment happens instantaneously, right? So that layering of value-added services is incredibly powerful. If Grab isn't able to do that, then where's the value, right? And I think what you see a lot of in WhatsApp groups, et cetera, around the fintech ecosystem is that people who want to take their 3%, but not actually provide any real value-added services in the payment, right? No value-added services, you get RAC, right? And in some cases, RAC is asymptoting to zero, right? Value-added services, you get paid, whether they are lending services or informational services or advertising and targeting services, whatever they are, that's the stack where people should be competing. They shouldn't be competing just on raw acceptance itself.
I think that takes us nicely on to Reuben's final pitch here. Over to you, Reuben.
Thanks for the tee up, Joe. So yes, I'm going to take a different angle to this. I think that through many fintechs have been set up, Grab as well, Grab Financial as well, to solve the credit gap. And I think during this whole crisis, this and coming out of it as we go into the rebuild phase, this gap is going to get bigger and bigger for the SMBs. How can we go about helping them, giving them have quadrennial? And we've seen the advantages of pay later products for consumers. And especially giving access to consumers who may not have had established credit history, access to a pay later product which allows them to sort of lower and grow their credit limits. I think that if we apply that same technology over onto the SMB side, couple that with payment rails, couple that with access to their bank account, we can provide them with a credit option that allows them to just make specific purchases to help build up their business in this rebuild phase. And the beauty of it is twofold. One is there's credit assessment on the user itself, and there's credit assessment on the purchase itself. So for the lenders, they're able to do risk management on both levels. And an interesting outcome from this crisis, as we spoke to multiple pay later providers globally, they've actually seen that the ability to control risk on these two levers and to price it accordingly, has really allowed them to manage the NPLs and the losses quite well. Of course, we haven't seen the end of the story yet, and but at least what we've seen so far, the data points have been very, very promising, and we applied it to the SMB side. I think that could be quite powerful.
Sure, we're seeing a lot of these models seem to be flying at the moment, and so I think with that, just like to thank you for your pitches, and I think it's best now to see what the audience thinks of your pitches. And so if we could bring up the audience poll. And while that's going on, I'd like to, we'll show the results at the end of the session. I'd like to kind of pick up on some of the areas that Joel and Milind talked about in terms of the real-time rails. And I know you covered quite a bit of ground on this, in particular, Joel. But if we zone in on Singapore and the FAST system, could you share your thoughts on new overlay services that could really create benefit for consumers?
I think we touched on a few already, right? So I won't dwell too much on those, right? But interoperability across different form factors of issuers, et cetera. But I think a lot of what Jeremy touched on is really where the sweet spot is, which is value-added services over the top, right? If you assume that a payment is a commodity, right, to a large extent, what's my value-added services, right? Is it enriched data, right? Amex has made a career for many decades, right, with enriched data as a core value-added service for larger businesses, right? Pay later, right? Whether it's working capital to the small business who's receiving the funds, or deferring the payment, or turning it into instant installments for the consumer. These are significant value-added services, and adding that messaging capability on top of FAST lets these innovative services be built in the same way that, you know, Apple, right, when they rolled out the iPhone originally, there was no ecosystem, right? All the apps had to be their apps, and it took an entire year before they let you build on top of their system, right? And of course, it took off. I saw today that Snap or Snapchat is trying to open up and be, you know, add the WeChat infrastructure so you could build apps within Snapchat, which is a fascinating idea, except Facebook thought of it 16 years ago, right? And it didn't quite take off, but what they offered was access to the service layer, access to identity, access to security, et cetera. We now have the ability to make all those services richer and make the fast value-added services layer, along with the SingPass MyInfo infrastructure and some of the other Singapore stack infrastructure, richer and richer, so that effectively the Singapore ecosystem becomes its own app store, right? And people are competing by offering better value-added services in an ecosystem where moving the money is cheap and access to eKYC and risk data is available.
Milind, anything you want to add to that, or Jeremy?
I mean, I think also, like, if we just think even just tactically from a merchant perspective and a business perspective today, I think, you know, real-time payment rails, when you look at them globally, you look at PromptPay or anywhere else, the advantage they provide is very specifically around low-cost, real-time bank account to bank account, or in some formats, whatever that is. And I think there's actually a massive need around somebody to come in and build a recon layer specifically for merchants. I mean, today, when you look at a business and they're getting all of their bank statements or whatever statement it is, each and everything is being there as a line item. I think that's a big play that I think from a value-added services piece will solve a pretty specific need. I think just adding to what Joel and I think we've all spoken about in some formats is there is this vision about, you know, and I don't know if we're going to talk about it later, right? But the reality is it QR? Is it contactless? Is it something else? The reality is that's open to the market. The market's going to decide that. And I think what Fast and Pay Now have a capability, as do other real-time payment rails like UPI and PromptPay, to actually switch that around and give the customer an option of, hey, what's the pipe you want to run on, right? At the end of the day, we're going to just enable it. And from a merchant perspective, it comes down to give me the same cost structure with the same power that exists on real-time payment rails. And I think the third thing, it goes back to also cross-border. I think, Jeremy, you spoke about this a little bit, but the ability to take all of these real-time payment rails and actually connect them is going to be extremely powerful in terms of solving problems the way they exist.
Sure, there's a lot of thinking underway in that as well around cross-border real-time payments, and Europe seems to be one of the areas leading the way as well. So, but Jeremy, do you want to add to the point that Milind made?
Yes, actually, both Joel and Milind made this point. See, we have Fast and we have Pay Now, the proxy looked up on our system. So if you look at how PromptPay has evolved and how the Malaysians and UPI, how Hong Kong real-time rails are going, pretty much we all start from the same starting point. You know, let's talk about messages at the end of the day about being to do real-time transfers within a national network. But there's also an opportunity to expand the kind of message and the kind of data these things can transfer to one another. And that's where you get richer data and you have richer transactions that the financial services firms, whether you're a bank, whether you're a wallet, and you can innovate on top of that. If you're able to know more information of your customer or what they're buying, and the hub itself gets bigger and bigger, the amount of information that individual stakeholders can pull, what it effectively means is that, as how Joel has mentioned, you can create an app store. It may not be an app store, but a product store where the banks can innovate on top of that and generate more and more stuff. There is Pay Now the obvious choice? Maybe not, but is it probably the only platform that cuts across? Probably. So I'm just saying, in that sense, the future isn't envisioned yet. What I'm talking about is all these infrastructure points are already existing. It's then making sure we clear as much of the infrastructure, put in place as much of this in the individual markets, whether it's domestically or cross-border, and the individual firms will innovate on top of it. And probably you will be very, very surprised what can come of this in the next, 2-3 years.
Well, maybe now is the opportunity post COVID-19 to start rethinking how some of our rails work across borders and domestically. And I just want to, I think we've exhausted this topic. I'm sensing that you guys have said exactly what you wanted to say around the future of real-time payments. There's an audience question that just seems to be gathering a lot of momentum. It's the top one. If you go into the Q&A functionality, it's the growth of e-payments has accelerated due to COVID-19, but also the massive subsidies from venture capital is covering the cost of using digital payments. So what will happen when these subsidies go away and 2 to 3% of merchants' revenues goes to the payments providers? Who would like to take that question?
Sure, I can take a first shot. I'm sure there's enough value across all four of us to add to that point. Look, the reality is that 2 to 3%, and some of those subsidies do work. I think they will have long-term impacts in terms of changing the digitization tipping point, as Jeremy spoke about. But the reality is some of this also comes down to what are the value-added services that come at those costs, right? So if somebody doesn't want specific value-added services, they will pick a cheaper layer that doesn't, or cheaper pipe that doesn't meet those needs, but will still get their digital commerce going and growing, right? And I think that I personally don't believe there is a right and a wrong. I think there are use cases and consumer experiences where the card will win every single time because of the way it is set up. But there are also very specific use cases where the card is not in play and some other pipe, most probably a real-time payment pipe of some sorts will win. It comes down to consumer experiences and how we enable them.
Thanks, Milind. Does anyone else on the panel want to chip in on?
I also like to join in. So, I mean, from digital payment, when you talk about subsidies, I think even when, payment companies are funded, no one actually uses cash to fund in large scale the processing fee. I mean, we're talking about billions and trillions of dollars of payment transactions going across Asia Pacific. So that is not what's happening today. When people raise a lot of money, yes, there's certain negative rates that they cover in terms of the cost of funds, but this is not a large part of where money from investors are going. So we don't see that changing much. In terms of the 2.3%, that's credit card rates. I mean, we've been talking about real-time. Real-time rates are not coming in at 2-3%. So the market has really fractured. The amount has come down. When you're using real-time pay now to pay, it's not 2-3%. And similarly, in different markets, real-time rails are lower. But at the end of the day, there is a price point. And just as what Joel was mentioning, if by accepting a certain payment type, it doesn't drive your business, it doesn't assist you in getting more sales, then fine. I mean, the concurrent or the value proposition of the payment provider doesn't exist. It's fine. Then it makes no difference to you. It becomes a cost of your business. But as with all these concurrent transactions, the value-added services that's been built in, whether it's from convenience, whether it's helping you drive the sales, whether it's making your recon faster, there are value propositions. So at the end of the day, it is a relatively free market with a lot of competition. So in that sense, the question sort of conflicts itself. How can you have 2 to 3% fixed revenue when you have so much competition? So in that sense, the market will play out, and they will find a price point that's acceptable to the majority of the merchants, and we'll go from there. Yeah.
Yeah, I think there's two elements to the cost structure, right? And as Jeremy said, this is benchmarking against cards, right? So that's the wrong benchmark. But there's basically the cost of funds, right, in a wallet scenario. And then there's the cost of credit, right, which is effectively the risk associated with standing behind that merchant, right, who may not be a great merchant, and the risk associated with standing behind that consumer, who also may not be a great consumer. Right? That's what comprises that fee. And it's a very big and a very mature market, regardless of what you think about how scheme fees may or may not have gone up over time. So if the cost of funds goes down because real-time payments is a more dominant way to fund a wallet, or you're directly pulling the money from your real-time payment, that directly drains costs out of the system. If the system enjoys less risk because you have better data, you're doing a push payment, there's no chargebacks because the consumer's standing there with their phone and pushing the money to you, there's no justification for that 2 to 3% because the risk is going out of the door as well. So I think all of us would see this number going down very, very dramatically the more mature the ecosystem gets, without losing really any of the value proposition benefits, because in fact the fraud is going out the window as well, which is why the cost of the fraud or measuring against the fraud goes down. So I think as the ecosystem gets bigger and you see larger levels of interoperability, you see more transactions flowing through the system, all the costs go down quite dramatically.
We've covered behavior changes, we've talked about cash, new value propositions and overlay services in Singapore. And Joel, you just mentioned there fraud, and that's one area we haven't really come on to yet. And the increase in fraud as we move more online. Maybe Joel, back at you onto the fraud question. What types of payment fraud are you currently seeing in the consumer space?
I mean, all the usual suspects, right? You got bad buyers, you got bad sellers. You know, we had someone today that is fully enjoying a service that they signed up for and wants to repudiate an instant bank transaction. The reality is they don't have the right to do it because in fact they authorized the transaction real time themselves. But the card schemes have dealt with this for 40 years at this point of how do you adjudicate those. PayPal's been dealing with for 20 years. There's just a maturation process for how do you handle disputes in a way that everybody is satisfied. The beauty of real-time payments is because it is so disproportionately focused on mobile. Mobile means we have lots and lots of data about the consumer, where they are physically, is this their personal device? Is this the type of transaction they're normally doing? What's other devices are in proximity? And it's actually quite a stirring amount of data that's available when you attempt to authorize a payment. And so in reality, the risk is much, much lower than you would see in older form factors of payment. So I think from our perspective, fraud goes down dramatically. But you still do need to up-level the infrastructure so that merchants have the ability to create rules, to create policies, to turn away payments that they don't want to see. You know, in the case of our business, Rapyd, we're in the process of rolling out a rules platform that lets people do that very broadly across a lot of different payment methods. I don't think that goes away, right? People want that control, but the reality is that the more payments go onto mobile, in reality, the fraud goes down, not up.
That's great to hear. So move to mobile. Reuben, I'll bring you into this part. What advice could you give to manage these fraud challenges that we're seeing?
I just want to echo what Joe said, because we are integrated onto so many platforms, the Grab platform being one of them, but also multiple e-commerce platforms and retailers. And because of that, we see a huge amount of information that really enables us to detect fraud quicker and to stamp it out quicker. So actually, you know, on the Grab platform and the Grab Pay platform, the fraud levels, even during COVID, hasn't really at all.
So Milind, what are you seeing from a bank perspective?
Look, I mean, I think, like Joe said, right? Like it's the normal. It's everybody's going through the normal stuff. I do think that there's a little bit of kind of risk on which merchants exist. Unfortunately, at the end of this time, I think that's going to be a leading indicator of what happens in the long term, and whether this, you know, as payment geeks call it, right? Does the item or the service get delivered as described? I do think that the authentication layers that exist today are making it better. I think there are enough risk platforms and more the better in some sense, right? That all have very varied value props that they bring. I think what we're seeing a lot more is the ability just to change behaviors, right? The ability to use the apps that they haven't used before and to figure out like the way it's going to work, the way how everybody's investing in digital in terms of discovery. Discovery is changing as a process as well. And I think the more discovery there is, it actually leads to lower fraud in some cases as well, because what happens is you're making much more informed decisions over a period of time as a consumer. But you're always going to have bad actors. I don't think bad actors go away. I think some of this comes down to how you minimize the value or the pain points of those bad actors.
So I think the bad actors just seem to get smarter, which is a shame. But we have one question here around. There's a few great audience questions coming in, and one of them I'd like to pick up on. And this is, you know, one of the key concerns for, say, some of the older generation is around the lack of familiarity with digital payments, and you know how safe digital payments are, and some of the best practices here. And how do you guys see this being addressed? And maybe this is something, Reuben, you could pick up on, and then we can ask Jeremy's thoughts as well.
No, this is a real problem. I'll be frank, like given getting my parents onto internet banking has been a challenge, and the customer journey just for some of these folks is just, it's hard for a regular user, not to mention an elderly person, and I think for us it's incumbent as the tech providers to just really keep simplifying the journey and improving the UX. I think that's and in terms of designing the products, we have to start including folks of that generation, because at the start they were not our focus, our target segment. But as we increase cashless penetration in society, I think we need to start bringing them in and involving them in our whole design and product development process in order to build for them. And then the other is just really outreach and just working with the governments and the various community bodies to just train and to just educate the old folks. And hopefully over time, we can decrease the digital divide.
Yeah, so if I have to join in here, I think if we could look at fraud and for basically how the older generation will look at it, I think if you address it from a technology angle, technically, digital payments with mobile apps and where authentication is done within your bank app or within an app that is done that you download, whether it's a Grab app or a banking app, technically consumer fraud should go down. Because where's your comparison? Your comparison is a card where people swipe or you can lose your credit card information that can go around. So if you're looking at bank cards itself, mobile payments is technically safer. I mean, this is from a technology angle, this is where we are looking at it. So if you want to encourage the older people or the elder generation to go from it, I think first and foremost is education, the fact that actually the mobile phone is actually quite secure and it's safe. And I've bumped into an older generation of people who ironically, when we make the user journey so simple, they actually get frightened and think that actually it's not very safe, which is the whole irony of it, right? Because they think it's too complex, I don't know how to use it. Okay, so we make it as simple as you can do. You take it, you scan on your face, and it's done. And they're like, oh my God, this is like, oh my gosh, this is so easy to hack. This is, there's a chances of a lot of fraud. But what they didn't realize, there's a bit of location strategy, there's a location data, there is Face ID, there's a whole bunch of different authentication that's going on in the background. So in that sense, as we go past this journey to try to convince an older or a generation that is very fearful, it's the balance that we have to do. The easier we make it, ironically, they think that it's even easier to defraud, but realize that actually there's a lot of technologies that go into it. And it's a lot of education. And as Reuben has mentioned, we have to work with the government, we have to double down, it's consumer message, and also as much as possible as service providers to tamp down all kinds of fraud that pops up and manage the PR that comes from that actually. Yeah.
Thanks, Jeremy.
Yeah.
We're coming towards the end of the session now, and we have a short presentation from Jo, the head of the Payments Development Office. But before I hand over to Jo, we have the results in from the poll we ran earlier to see who's the winner of the pitch. And it's an overwhelming win for Jeremy and concurrent services on top of payment transactions. So a virtual round of applause for Jeremy, the king of payments. You can see the poll coming up now. And there's actually, before we hand over to Jo, there's a question, an audience question referring to that concurrent service model. So the question is, who wins the game basically in concurrent transactions, and who is most likely to stake a claim when we look at the landscape today?
Okay, so I don't think there's going to be one big winner. So concurrent transactions is literally that. It's the ability of people to run multiple services on. So, as we mentioned, real-time rails is the payment rails, real-time payment rails. But every ecosystem will evolve. There will be more and more open platforms. And if we're talking about APIs, there will be hubs that will be created around the region, whether it's around Singapore, whether it's around India, whether it's around China. And these are ecosystems that will enable and support the multi-processing of all these different hubs. So it's a combination of value-added services, interoperability, payment, and there won't be one winner. It's too big. This is so big, there'll probably be 10, 15 winners or 10, 15 platforms that you gear to. So, you know, if you're familiar from the tech, the EDI, electronic data interchanges of this will evolve. It will allow people to do concurrent. There won't be one winner, but payment guys tend to stand a good chance because, like I said, payment is the origination, or not origination. Payment is the final outcome that people, you know, it's not final outcome. It's what drives transactions. You have to pay. So it will be probably a payment plus player. And we'll see how it evolves from there. I mean, you see all the digital companies getting into payment. There is a reason why, because payment's the core. So from a payment value-added services up, it will be probably a player that plays within that space itself. Yeah.
So we're all winners on this call. Thank you to our panel. Please do stay on the line, and we'll come back to you for final comments after we hear from Jo. Over to you, Jo.
Hi, everyone. Good to see all of you again. And thanks so much to our panelists for very insightful comments, you know, from Milind and Joel about new digitalization like RTP, as well as Jeremy and Reuben on interoperability and pay now, both topics very close to our hearts here at MAS. And I'd like to take this time also to congratulate Jeremy on winning the audience poll, audience favorite. I'm so glad that I'm not being judged or scored on my very short presentation here. So just to take about 5 to 7 minutes to share with the audience here about our key initiatives, as well as a very, very short recap on our new regulations, no doubt familiar to many of you. So Dawn, if we could have the other slide up, please. Thank you. So at MAS, one of our key objectives, of course, is to foster innovative payment solutions with the industry and to strengthen our core payments infrastructure for businesses and consumers. Making e-payments safe, simple, and secure, as well as accessible for everyone to adopt and use is the backbone of our key e-payments initiatives. Although taking Jeremy's point from just now, maybe for the older folks, we should try to make it less simple, right? That's then they feel safer and more secure. Is that correct? So we'll keep that in mind. I'm sure we're all familiar with PayNow, which allows all of us to pay each other instantly using our mobile numbers. So PayNow, as you know, is the central addressing scheme that rides on the fast infrastructure. So with FAST as the foundation, we, together with the ABS, of course, were able to roll out PayNow, which allows funds transfers using mobile numbers, NRIC or UEN, instead of a rather difficult to remember bank account number. So it's important for better customer accessibility and the growth of the payments ecosystem that we make FAST, the core instant retail payment system, also available to non-banks. And I think we touched on this earlier during the panel session, making FAST as well as PayNow open to not just banks, but also non-banks to use. We're working on this and making good progress, I like to say. So turning to PayNow, we've been working with ABS to develop and launch PayNow since its inception. And of course, the team continues to work with ABS to push for the adoption and use of PayNow, as well as PayNow Corporate. The adoption of PayNow by Singapore residents has been very healthy and with a clear majority penetration rate. So the numbers are on the screen here. I won't read them out to you. But the adoption of PayNow by businesses or PayNow Corporate was a little slower to pick up initially, but recently we observed a very distinct surge in PayNow Corporate adoption. You may have heard in the Fortitude budget, so that was a couple of days back, that since 1st April, more than 50,000 new businesses signed on to PayNow Corporate. And in April, we saw a tenfold increase in growth. So that's quite spectacular. And we think mostly this was attributable to disbursement of foreign worker levies and also the PayNow campaign that we've been working on with ABS. So there's an ongoing incentive program by ABS where businesses can receive payouts for new PayNow corporate signups. So this is basically paying you to adopt and use PayNow. Those of you who have not signed up, please do sign up now. Adoption is very healthy. So the next stage of Pay Now growth is likely to be in the P2P or B2B segments. So in particular, when Pay Now is linked to e-invoicing, I think that's where we also see a bit more of the request to pay that Milind and Jo spoke of coming into force, that will unlock true digitalization for many businesses. And moving on to the next topic on regulations, the next slide, please. Okay, I know that some of you have seen this many times, but for those of you who have not, we thought that it was a good time to just do a very quick recap of conducive regulations for e-payments. We've redesigned our legislation to give consumers and businesses confidence in e-payments. So this is one part that we really worked on, because without consumer and business confidence in e-payments, actually from the demand side, there would be a gap that has to be addressed. So we've done that, and through the new Payment Services Act, which came into force in January this year. So the act was crafted to give consumers and businesses the confidence that payment service providers they use are well regulated and supervised by MAS. I think we have some sterling examples here today within the panelists, while promoting innovation and growth in payment services, ensuring that there continues to be a variety of payment solutions available to suit each need. So the Act does this through addressing the 4 key risks and concerns common to payments. MLTF, you know that, user protection, interoperability, we spoke of just now, tech and cyber risk, of course. So the measures are calibrated carefully across 3 license classes, money changing license, standard payment institution, and major payment institution. But the key takeaway from all this is that both consumers and businesses can be assured that licensees under the Payment Services Act are held to a good standard and also a valued member, of course, of the payments ecosystem. So this year is a transitional year for licensees and potential licensees, and it will end in January next year. So we look forward to welcoming many more payment firms, as well as new financial institutions under MAS's care and supervision. And we continue to build an enhanced payments ecosystem together with the industry, of course. And back to you, Becca.
Thanks for that, Jo. Great presentation. So to finish off, I'm going to ask for the final comment from each of the panelists, and also your green shoot story. So your positive news story to take us into the rest of this week. So I'm going to kick off with our king of payments, Jeremy. You're up first.
Actually, I don't really have an inspirational story, so maybe I'll just go from trying to be encouraging. I think we in the payment industry or in fintech industry, we're actually in a space that actually count our blessings. We're very lucky to be in this space. I think there are a lot of businesses that are going through a lot of challenges out there. And what we can say to feel good about ourselves, or even as a note that I tell my staff internally, is what we do now will probably matter more than we realize, because what's happening out there, what's happening in the economies, it's quite damaging. I mean, we do retail payments. We know how F&B is suffering. We know how retail is suffering. And all of these is just accelerating the trends to be. So, you know, people are going towards e-com. This is a trend that's been around for the last 10 years. I mean, when the first Tower Records and the first HMV, you know, when they first digitalized music, right? That has happened this 10, 15 years ago. So this might be the ending stroke for a lot of these evolutions. Things are moving digital. So what I'll say as an encouragement, as also a feel-good factor for ourselves is, you know, not to get ahead of ourselves, but you know what, in payment, we matter. Pay attention to what's happening. There's a lot of destruction in the services, but there's also a lot of opportunities that are being created. As much as possible, we will try to support the ecosystem, play our role in supporting business in their revenue collection. Payments are essentially revenue collection companies. If we can find innovative ways to give a credit and help our partners and merchants collect revenue, we are playing our little role in this whole ecosystem. So I think it's not so much of something that I stumble upon that's inspirational, but this is, I think we should stay positive and stay healthy. I mean, that's the whole thing. I mean, you know, let's all stay positive and stay healthy, and we'll all get through really, really well on the other side.
Thank you, Jeremy. Reuben, you're up next.
Sure. So what I found exciting during this time, apart from what Jeremy just mentioned, is this whole collaboration between fintechs and banks. And I think that what we are seeing around the world, dislocations in the markets are actually accelerating and making the collaboration more conducive. I'll give an example. In February, when we were still able to do international travels, I was in Thailand having breakfast with one of the insurance partners there. And the topic of COVID came up, and we were talking about how we could come together to protect the frontliners. And we're just drawing on a piece of napkin. Within 2 weeks, the insurer put together a package and priced it, and they got approvals from the regulator, and then we issued it in 2.5 weeks. That was the fastest product ever launched in Thailand for insurance, and a brand new product. And the sign up for it was just phenomenal as well. We literally had 80,000 sign ups, within a short span of time, within a week or so. And these are selling to folks like our drivers, where typically they may not have been the most obvious consumers of health insurance. So for us, we see collaborations like that. We see collaborations on the lending side, where banks are coming to us to collaborate in data exchange and as well as collections. And we think that all these acceleration of collaboration will just keep increasing. And together, we are able to leverage each other's strengths in order to serve our consumers and our merchants better. So that for me is a very, very good outcome from this time.
Jo, I could see you nodding away as Reuben was speaking. What's your green shoot story?
So my green shoot story is very much from the heartlands, and I was nodding because I think there is a fundamental shift in consumer behavior here. The SGQR has been around in the hawker centers for actually a while, and you actually have been able to make payments via QR codes at your favorite hawker store. But I must tell you, I didn't have the courage to do so because I was too afraid of being scolded by an auntie or uncle, facing rejection. So I didn't do it until when the circuit breaker came around, and then I mustered up the courage to ask the drink stall in Zion Road Food Center, like, so can I use SGQR to pay you? And it started from there. And actually no one in the hawker center has refused me. And in fact, there are many stallholders now who say that, oh, this is great because then we don't have to exchange any cash and it's very clean. So I would say that, start now, start at the hawker center. To Jeremy's point earlier about old folks, maybe they're a bit more savvy than we think they are. A lot has changed during the circuit breaker.
I just want to jump in, Jo, because we put the first QR 5 years ago in our hawker centers. And exactly what you mean, we get scolded, but now they are accepting it. Exactly what you mean. I actually have encountered a situation where people ask about it because it's clean. So, okay, not to jump into your inspirational story, but exactly.
No. I'm happy to share the story with the audience favorite. Good that we have the same views on that.
Yeah. It's a good story to share as we come up to dinner time. So everyone head out to the hawker centres after this. Milind, what's your green shoot story?
Sure. Look, I think Jeremy and Jo kind of spoke about this a little bit as well. And I think Reuben did. I think this is an opportunity for all of us to come together, larger organizations, smaller organizations, irrespective, to actually solve customer issues and customer pain points, right? And to do it constructively while actually solving problems that exist rather than living in our kind of siloed worlds. And I think, that's what I look at as a major opportunity. Yes, digitization is happening, but, by itself, digitization isn't cool. The whole point is it's helping these companies survive. And I think, and these consumers actually continue with their lives. And I think that's really what needs to happen across the industry. I mean, Jo speaks about these fintech chats that we have, but the reality is, how many times are we all coming together to partner and in a win-win scenario where the customer also wins? That needs to happen more often, and I look forward to those opportunities.
And last and certainly not least, Jo, over to you.
So I agree with everyone. I think if you take Jeremy's point around effectively creative destruction, right? And if you go back, I'm old enough, Jeremy, Milind are certainly old enough to remember the dot-com collapse, right? There was a lot of businesses, right, that came directly line of sight from the dot-com collapse. I told somebody the other day, I remember the founder of Twitter, his previous business Blogger, I remember getting the email where he'd fired everybody in his team. It was just him, one person, and he had this very heartfelt email. And from there, he rebuilt the business, and obviously Twitter is a big deal. There's an awful lot of things that people interact with every single day that draw their line of sight directly to .com 1.0 and .com 2.0. What's different today is what Reuben talked about, which is the community and the connectivity. What didn't exist then that exists today is the instant access to tools, the communication, the ability for people to work together and collaborate efficiently and globally in a way that didn't happen before. Right. So when I think of what I tell people outside of Singapore is the Facebook group, the Singapore Restaurant Rescue Group, right, where you have 100,000 people, 150,000 people getting together to say, look, we want to buy, we're excited to get food from places we didn't know even existed. How do we help these businesses? How do we lower their costs? How do we really rally around them? I think that's very heartwarming. And I think you're going to see that almost everywhere, where people bring the tools to the community, wrap themselves around it, and we kind of innovate as a community, not just of the innovators, but of the everyone, to touch on Joe's point, of the everyone, to see a better future that's in front of us than behind us, because we're going to get back in touch with our common humanity, and digital is going to be part of that.
Thank you, Joe, and thank you very much to all of our panelists here today, and also the audience. We've had amazing questions coming in throughout the session, so thank you again. And have a lovely evening. Go to your hawker centres. As we dial off, you'll be seeing a QR code come up on your screen, which is a government survey to see how COVID is affecting you, if you would like to complete that. After that screen, you'll then see another QR code, which will take you on to join our next Green Shoot session next week, which is in partnership with the Milken Institute. So please do stay with us. And thank you again, everyone. Thanks for this.
Awesome. Thank you for having us.
Thanks, guys. Nice chat.
Thank you.
Thank you,
Stay safe. Bye.
Thank you.
Thanks.